Welcome, everybody, to another installment of The Way It Is. And I'm your host, Luca here at RE/MAX Service First Realty. And I am thankful and fortunate to re-invite a former guest, Huw Llyoyd-Ellis. And I thought it was timely to have Huw back on the program. He's a professor in the Economics Department at Queen's University. And for those of you that wouldn't have caught the first one, and it's been a while since he's been on, Huw has over 25 years of experience conducting academic research in a broad range of areas, including economic development, growth and inequality, economic fluctuations, fiscal policy, and housing. His research is regularly published in leading academic journals. Huw has taken on several administrative roles, including department head, and teaches development economics and macroeconomics at both the undergraduate and graduate level. He's also an academic economic advisor for Limestone Analytics, where he recently worked on projects related to international trade, food security in East Africa for the USAID, employment impacts of development interventions for the World Bank, and economic impacts of COVID-19 in Ontario. So welcome back, and thank you for being here, Huw.
No problem. I just want to point out that there's a typo I left in the bio there. It's just USAID. It's my fault. I realized that.
Okay, very good. So you know what? I probably misread it the first time I did it too. Then.
No, you didn't misread it. I just wrote it wrong. So.
Okay. Well, thank you for being here. I love your background because it's actually in keeping with the season. Now we're finally getting some spring weather, which is great. And of course, we were just chatting before we came live, and a lot of economic balls in the air right now, which is one of the reasons why I wanted to have you back. And I guess I had a couple of just some bullet points, and I want to start with the it's the elephant in every room today, inflation. Help explain to us lay people where is it coming from? What sort of do you think is its future, and how do rising interest rates offset it, I guess, or combat it? If you want to sort of give us the sort of macroeconomics for dummies, if you will. So,
okay. Well, at the risk of repeating myself a little bit, but just to remind you, I guess we usually think of it as being a combination of cost push and demand pull, right? So it's supply and demand as usual. But then there's a lot of things that have happened in the last 3 or 4 years that have driven the cost side. We know that there's still a lot of supply chain disruptions in the world, globally, and I guess now the war in Ukraine is just making that all the worse, and that's still an ongoing part of this. And so we see it's a global phenomenon. It's not just true in Canada, and so this is in fact in the US it's probably even worse at the moment in terms of price inflation, overall price inflation. Now, added to that, of course, is the demand side, which is, largely in the last little while after the downturn during the COVID, the early part of COVID anyway, which, by the way, led to big declines in inflation, right? We had zero inflation for a few quarters there. And so there was a sort of a catch up, and now we've gone beyond where we were. But, so that sort of delayed effect has been a result of people basically putting off demand purchases, and now they're back to buying again. And then combined with all of that has been all the increase in government expenditure, which was necessary to support people's incomes during the downturn, but it's still there. And despite the guardrail story that the federal government has been telling about how they would, cut back expenditures once we got back to full employment again, which we kind of are at close to it anyway. That hasn't really happened, and now we've got a lot of other reasons to spend more money. So that's all fueling inflation, and it's fueling people's expectations of inflation in the future as well, I think.
So I I don't know the exact percentage we're at now, but we're like around just under 5 right now, aren't we? As far as inflationary percentage
I think
goes,
we're just under 6 actually.
Oh, are we?
5
Okay,
point
so there you
something in
go.
the last
So
quarter. Yeah.
okay, so I guess from an economic standpoint, I mean, zero inflation, I think, is probably an exception to the rule as well. So where's sort of that comfortable, normal level that inflation, I guess, should sit at if it exists? I guess is there sort of like a norm, if you will?
Well, there's a target that the Central Bank of Canada and other countries as well, not just Canada, has typically aimed for, which is around 2%. I mean, in general, having a little bit of inflation in the system is generally seen as an okay situation, even though it kind of erodes the value of money. As long as it's stable and everybody's aware of it, and it's people understand how it's going to affect their pensions in the future, etc. As long as it's not too high and volatile, it's generally thought to be good to have a little bit of inflation, partly because it bounces around that target, and if it gets negative, I guess a lot of economists worry that when price inflation becomes negative, it kind of stops people from buying stuff because they're going to wait until it's cheaper to buy them. So that kind of has a negative effect on demand. That's the worry. So you kind of want to avoid situations of deflation by just having a little bit of a buffer.
Now, I was listening to the CBC on the weekend. It's a great program. I like it when I can catch it. Paul Havershoot, I think it's The Cost of Living or something like that.
Yeah, it's very good, yeah.
And they raised the dreaded specter of stagflation because in that, I guess, from what I understood, was if the economy didn't grow or the GDP didn't grow for so many quarters or something like that. Maybe can you comment on that and what situation we're in, I guess, as a country or as far as those metrics go? So,
well, stagflation got its name from the episode in the 1970s and early 80s in particular, and it's basically a situation where you have high inflation, even though the economy is stumbling. It's like basically going through a recession, which usually isn't expected to happen because it's when we're booming where inflation starts to creep in. And so, kind of what's happened in that period, most people agree, is that in response to the kind of oil price shock that happened at that time, central banks kind of cut interest rates quite a bit. They tried to, and that actually stimulated inflation. So you kind of when demand is high, you want to raise interest rates. Sorry, when demand is low, you want to cut interest rates to stimulate demand. But when it's the supply side, when the costs of the economy are causing this recession, you don't really want to be doing that. And there's this view that during that period, central banks in general kind of accommodated the situation and led to more inflation than was necessary in that period. So there's some notion that that's kind of what's happened recently as well, because it's the pandemic and the subsequent sort of global disruptions in the economy are kind of a supply side issue. At the same time, the government has been stoking up demand in various ways through expenditure and also very low interest rates. And in some sense, they're kind of creating the inflation, but partly creating inflation through that during a period of relatively low growth. So it's a bit like stagflation in the 70s. It's not exactly the same, but it has that flavor.
Right. And so given, the crisis in Ukraine, which is exacerbating this even, this pretty entrenched supply chain issue, which even the pundits, thought it would sort of sort itself out as COVID started to end. But this obviously was another log on the fire because those supply chain issues are still very real. They're still very, they're not alleviating themselves. How high could inflation get? And I guess in saying that, I mean, I know next week, Macklin, everybody's projecting that it's going to be a half basis point increase in interest rates. What's the correlation there? How does the government react if inflation keeps rising, and how high could inflation go, I guess?
Well, like I say, it's by raising interest rates, the intent is to stifle demand a little bit. Partly in the housing markets, but also in other areas, cost of borrowing goes up a little bit. In my personal opinion, they should have been doing this already, right? So they're in a situation now. In some sense, their hands are tied, right? Because it's not. Again, this is a global phenomenon. They can't really raise their interest rates much beyond what the US is doing. Otherwise, they're going to create problems with the exchange rate and trade. So there's a limit to what they can do. They can go a little bit, but they can't go too far away from the US. So in that respect, there's not much they can do. But from a global perspective, we should have had interest rates sort of gradually rising, starting half a year ago. They've kind of gone up a little bit, but now we're in a situation where the inflation starts to get built into the system. If people start to expect it getting built in, if you think about, an example is that I go back to the housing market just because we've been talking about that before. Inflation. If you expect inflation to continue at 5 or 6%, and the interest rate, the mortgage rate, like discounted mortgage rates are like 2%. You're being paid to buy a house, essentially, right? Yeah. It's a negative real interest rate, right? Yeah. So it sort of depends what you expect is going to happen in the future, but that's not, and so it's true. It's just like it makes sense to borrow and spend right now, and that's just going to fuel inflation even further. So that's the kind of problem if you don't put a kibosh on it.
Yeah. How much, if you can comment, how much is the labor shortage or the playing a role in all of this? I'm going to guess just from where I sit, my brain goes to less quality labor, because all you have to do is look in. Scroll on the social media feeds and on LinkedIn, and everybody's saying now we're looking for new people. So presumably then, if they can't fill labor gaps, that's going to obviously force them to increase the price of their widgets or something like that based on increased wages for those that they have, right? So
that's what we'd expect. So as that market gets tighter, wages are going to go up. And if people are expecting inflation as well in the future, they might want to require a higher wage to either enter that market or shift from one job to another, and that could add to the inflationary spiral, as they call it. Yeah, this is the worry.
Yeah, and there was an announcement today because everybody's positioning themselves now for this June election in the province, of course, and the Ford government is reinitiating everything they took out when they first came into power. So they're increasing the minimum wage now, I was the recipient of a $460 check yesterday from the provincial government for my 2 years of my license plate sticker that I had paid or whatever. So,
that's quite a few of those.
Because I'm going to tie this into what I do, real estate, and because you hear it every day that housing crisis, and housing affordability, and that's the issue, which I won't get into that debate, but to me, people always say, well, what's one of the, because it's such a multifaceted problem and it's got so many layers to it, but increasing wages has to be one of the core principles of trying to help people afford more things, whether it's housing, whether it's cars, whether it's appliances, whether it's everything. And we've talked about a living wage, but given where does Canada sit as far as globally in terms of, or even Kingston or Ontario as far as wages? Are we competitive? Are we below what the global barometer is?
I guess it depends. I mean, there's a distribution of wages, right? So it's if we're talking about affordability, we are talking about the bottom of the distribution of wages. And then it's not really about competition globally or anything like that. It's really about whether people can afford to buy basics. And I think relative to other places, for example, the US would do pretty well in that score, but there's still issues especially on the housing side. But on average or towards the top end of the distribution, where I don't think we're that competitive. I mean, there's room to be, if that's what we're talking about. If we're talking about hiring the sort of skilled people from around the world to come to Canada, then there's probably room to be more competitive there in terms of wages. But I mean, I'm not sure that's the main issue in some respects. I think that the labor market is driven by supply and demand as usual, and fair enough. That's going to be what's going to drive wages, even if there is some effort, to keep wages at the bottom, reasonable.
Yeah. So. Because I want to tie it in if we can. Immigration is a big thing, and I think we touched on it when we spoke the first time, because it was always the conversation around, is this a bubble? Is it going to collapse? Is this market going to what's happening in the market? And just before we came on, we were chatting briefly, and you asked, everybody always asks what's happening in the housing market. Well, it's still pretty robust, but it's shifting now, right? I mean, the good thing is we're in the time of year where there is more supply coming on, at least locally. Anyway, I'm assuming in most markets, because it is the spring market, quote unquote, the time of year, April, May, June, when the majority of people, if they are going to migrate or sell homes or move to somewhere else, that's when the inclination is to do so. But going back to what I think we talked about before, was we're still waiting for this flow of immigrants to come to Canada, or to both in a professional sectors, but just to fill all those other labor gaps, right? Can you comment on what you see happening there, or if you have any insight?
Well, there was a delay in the process of processing migrants during the COVID period, worst of the COVID period. But my understanding is now that's a lot of people are starting. There's going to be an influx of people, but it's a target we've had for a while, and I don't think it's unexpected, right? So, So I mean, ultimately, the other thing to remember, of course, is there's also people going the other way, right? There's quite a lot of migration to the US from Canada, for example, right? So there's a bit of a balance there, but it's certainly true that we need more housing as a result of this. It's a balance we've got to achieve. I think in the last few years we've been on the wrong side of the balance in terms of supply. I mean, the supply has to keep up with that increasing growth. But we should be getting there now. We are starting to get there, as you say. There's more inventory coming online. I think the budget, which is tomorrow, should make some further announcements on some of this stuff. I'm guessing, to try. I guess they have a commitment to support more construction, in various ways. So we'll see. But I think that's going to have a significant impact.
That was my bullet point, because I wanted to get your take on what would you like to see, and what do you foresee coming out of tomorrow's budget? I know I've had some clients call me worried about this capital gains increase potential, which certainly would, I think, be counterintuitive to helping the housing market, and I'll comment on that after. But yeah, if you would just
capital gains taxes. You mean?
Yeah. There was I think there was a movement afoot, or a threat that they would increase it to 75% or something like that, a threshold of 75% for those selling a second property, I guess, if you will, or whatnot.
Right. So right. Yeah. I mean, I guess there's a bunch of things that they are likely to introduce, I'm guessing. Well, that's one of them. I'm not sure. Yeah, you're right. I'm not sure whether that's going to help or hinder. It's not really going to help the market that much. And I think, I feel like there's a lot of things that they're probably going to talk about. Whether they'll actually implement them very quickly or not is always a question. So they talked about this, I guess, as I said, encouraging local municipalities to, allow more construction through streamlining the approval process, I guess is the word that they're going to use. And we sort of seen Ford as well as been trying to push that a little bit, although he backed off to some extent. And I as someone who lives in Kingston, in a neighborhood in Kingston, I can understand. I'm a bit of a NIMBY, right? I mean, I don't want tower blocks and density, high density right next door to me, but I also understand the need for it, right? So, and I think most people are in that boat. I think you can't really bulldoze over people's preferences on this, right? It's a process, right? You have to get people to buy in. Have to make the arguments. It's going to take a little while, and that's kind of always a tension in the housing supply, I think, right? Where do we put stuff, and how dense is it, and how it affects the neighborhoods, and we can't ignore those people's voices in that, right? And so that makes it a very slow and difficult process, typically.
Yeah.
But I think that's just the way it is. I mean, we're not Russia, we're not China, right? We can't just walk over people's desires, right? So,
no, and yeah, you're right. Yeah, no, and so I guess where do you fall in terms of other options or things to alleviate this housing crisis or a housing affordability from an economic standpoint, or from where you sit? What things has no one thought of, or the government not introducing, or maybe shouldn't be introducing? Do you have any thoughts on that?
Well, I think a lot of the things actually that they talk about are kind of window dressing. I mean, the thing about taxing foreign investment. I mean, it's kind of, there's a scapegoat. I'm not sure there's anything there. I guess it's the transparency of the buying process they talk about. People buying blind. We hear stories, but you probably know better than me. But my guess is that's happens, but it's not that big a deal. But I don't know. So I guess there's a push to make this process more transparent. But at the end of the day, there's this. I think my belief is that there's a combination. The big things are the combination of the process, which I can't really see, like I talked about before, of approval. Can't really see speeding up that much. Maybe a bit, but that kind of constrains supply. We've got migration, as we talked about, pushing demand, which is a positive trend, I think. But I think, as I've already said, just the big thing we've got is extremely low, even negative interest rates, and because of real interest rates, because of expected inflation, and so that creates. I mean, if we don't raise interest rates soon and have a reasonable, timeline for growing them over time, I think we're going to continue to have these problems.
Yeah.
Because everything else is if you think about it, 2008 mortgage rates, 5-year mortgage rates were like 6%, discounted, on average about 6%. Now they're 2%. That means every dollar you borrow, is 3 times as cheap, right?
Yeah.
So if house prices had stayed the same, basically the cost of a mortgage would be a third of what it was 10 years or 12 years ago or whatever. So it's not surprising prices have risen a lot, right? In that way. Again, I'm not saying that offsets the dramatic rise in prices. It's still very expensive, but a big part of that is because of interest rates. So, unless you solve that problem, all the rest of it is a little bit. I think it's small potatoes, right?
Well, and I appreciate you making those comments, because and here's from where I sit, because I'm in this every day, and because there's always right? There's everybody, all the different stakeholders have are either positively affected or adversely affected, or right. I mean, because a raise in interest rates, potentially penalizes somebody and rewards someone else, and yet, you're right, because the stress test is at 5.25% or whatever. So presumably there's room for rates to get to there at the very least, right? So because that's what the banks and everyone's already approving people at, and whether they choose to take, and now in talking with the mortgage brokers that I work with, you're right. You qualify for a fixed rate, but you're still going to take a variable rate because the variable rate is like at 1.99 or 2.10 or something like that, like you said. So it's half of what you're getting approved for. So interesting thoughts. I still do believe, though, the government has to participate in some form of housing supply line, like of increasing the supply chain, or the supply line of affordable housing, in terms of being an active participant with these developers, with landowners, because it's one thing to make the process more streamlined, but at the end of the day, developers, everybody still has to realize a profit, right? Otherwise, they're not gonna do it. So that's why I'm saying the government has to be some kind of participant in that process in order to either offset profit or compensate for profit in order to bring on more housing. I don't know. That's just me sort of really sort of just
I agree.
talking out loud.
I totally agree. Yeah. I mean, I guess my point about the streamlining was that it's difficult to resolve them because it's a complex. It's politics, right? It's local politics. It's hard to just try to go around it, right? So like you say, perhaps some kind of subsidization or maybe achieving a more general understanding of what is needed in terms of supply. That we have. I mean, I think in Kingston we are seeing a big growth in supply, and so I guess one desire is to make that more affordable. Of course, that's always a difficult issue, right? I mean, building, people, there isn't a lot of profit for developers to build cheap housing, basically, and so that's where we could see some subsidization. I think is one way to go.
Well, exactly. I mean, and again, it all stems back to this supply side issue because materials and everything they've gone up 40, 50%, and depending if you're buying a piece of plywood or a piece of lumber or windows or doors or whatever it is, right? All of those materials that builders need to put these homes together. I mean, the other side of it too, though, and that's where Kingston, it's a double-edged sword because we benefit, is this migration, though, of all these buyers from the other centers. I mean, we've had this massive migration of buyers from the GTA. Massive. I mean, at one point there, I didn't, I'd have to actually dig deep and do the stats, but I dare say it was 5 out of 10 or 6 out of 10 buyers was an out-of-town buyer, during the last
that's
quarter.
Interesting to know.
And you see it because they're being represented by out-of-town agents, right? I mean, these agents they can't compete in their own marketplace. The buyers can't buy in their own marketplaces. So places like Kingston, even Belleville now has become popular, or places further afield, right?
Right.
Anyway, I mean,
which will then put more pressure on the rental market too, ultimately.
Right, the rental market, and that's just my pet peeve if they raise this capital gains thing, because that's going to take inventory out of the marketplace. Because if you're an investor and you've got a secondary property and you're thinking, well, maybe I'll cash it out now you're going to think twice. Now you're going to keep it in inventory, and now it's not going to become available for someone to buy, to either move in or occupy or what have you, right? So anyway, all right. Well, listen, we won't solve all of the world's problems today, unfortunately.
Yeah. We had a good try, though.
We did have a good try, and I want to thank you again for coming. And we'll stay in touch, and we'll see how the budget goes tomorrow, and we'll see where interest rates go, because Macklin is probably definitely feeling a little uncomfortable under his shirt collar, I have to say, these days. But like you said, maybe he'll. I guess he's got to face the reality that interest rates have to be going where they need to go, right? So
yeah, and unfortunately, it's a reality we're all going to have to face at some point, and it is going to be costly. So I think it might end up creating a recession, right? But they've kind of left it a bit late.
Yeah,
if they'd done it more gradually, I think it may not have been such a problem. But anyway, that's hindsight is 2020. Hindsight is 2020.
Absolutely. Yes, it is always. Well, listen, Huw, thank you so much. I really appreciate it. And take care of yourself. Enjoy this great spring weather while we have it. And and I'm sure we'll talk again to see where the needle falls next time. So
exactly. Thanks a lot, Luca. Have a good day.
You're very welcome. Take care.